If you're thinking about buying a home this year, this might be the most important video you watch before you do anything else. Because here's the truth that many agents won't tell you. Buying a home when you're not actually ready doesn't just cost you money. It can set you back years and tens of thousands of dollars. I've been selling real estate for over 17 years and I've seen it happen. Smart people, good people who jumped in too soon and paid a serious price for it. So in this video, I'm going to walk you through the 7 situations where buying a home right now might be the wrong move. And if you recognize yourself in one of those situations, you might want to just go on pause. And at the end, I'm going to tell you exactly what you can do about it. Before we get into this, I want to let you know that I have put together a list of special loan programs for home buyers. Think below market interest rates, low or no down payment programs, or programs that even offer thousands of dollars in grant money. Just reach out in the comments, or better yet, just reach out to me directly and I'll be sure to send you the list over. Okay, let's get into it. And one caveat before I get started, I just want to let you know that I am talking in generalities here. Everyone's situation is specific, so I do recommend that you speak to a lender or a CPA or both before you determine that you're ready to buy. Okay, let's start with the first thing that really trips up the most buyers more than anything else, and that's credit or your credit score. The difference between a 680 credit score and like a 760 credit score is more than just a number. It can have a real impact on your interest rate. So on like a $500,000 home in Portland, that gap can mean maybe hundreds of dollars a month or thousands of dollars a year in interest. That can really add up to a lot of money over the life of the loan. Now, can you technically get a mortgage with a lower score? Yes. An FHA loan can often go down to like 580 or lower. So technically possible and financially smart are two different things. If your score is below 680 right now, you might want to take a few months or 6 months or 12 months to really try to get your credit score up. Maybe pay down revolving debt, fix any errors on your report, and don't open any new credit lines. The math is very likely to work in your favor if you get your credit score up, and you can also talk to a lender to see what recommendations that they have to really improve your credit score and to get a better interest rate when you're ready to buy. Okay, the second thing that I want to talk about is if your income is unstable. Here's something I see more than people might expect, and that's someone finds a home that they love, they're excited and they're ready to move forward, but then we start peeling back the financial picture and discover that their income is a moving target. Maybe they're in a sales role where some months are great and some months are tough, or maybe they're just started a new job and they're still in the ramp up period. Maybe they're doing gig work, freelance, and they're between steady positions. Whatever your situation is, buying a home based on an income that you're not sure that's gonna be there 6 months from now can be a real problem. Because what happens is a mortgage payment doesn't flex with your income. It's due on the first of every month, whether your business is going well or not. That fixed obligation on a variable income is where people can get into a lot of trouble. So I just recommend that you're really honest with yourself with where your income is and where your job is. You want to be sure as much as you can be that it's going to be sustainable over the long term, as you're taking on a 30-year loan commitment when you buy a house. So number 3, you're in a self-employed job, but for not long enough. And here's another thing that surprises people who are in self-employment. Lenders will use your net income from your returns, not your gross revenue. So if you write off a lot of expenses, your qualifying income on paper will be significantly lower than what you actually bring home. There are loan products designed for self-employed buyers, like bank statement loans, for example, but they typically come with a little bit higher interest rate and larger down payment requirements. So if you're in year 1 of your self-employment, the play generally is to keep renting until you have 2 years of tax returns to provide to the lender so you can come to it with a position of strength. Though I would also recommend talking to a lender just to be sure if 1 year isn't enough. Okay, the next thing to be careful about is if you're thinking about moving again in the next, say, 2 to 3 years. Real estate is usually a long game. When you buy a home, there are closing costs, typically, let's say 2 to 4% of the purchase price. And when you sell, you're gonna have closing costs and commissions, say another 5 to 6% on your transaction costs. So those are meaningful numbers to clear before you even break even. In Portland's current market, most buyers are going to need about 3 to 5 years in their home before the appreciation and equity growth will be enough to cover those transaction costs. Some neighborhoods are moving faster and appreciating faster, and some are moving slower, but that's the general range. So if you know you're going to be relocating in a year or 2 or 3, and if your life situation is more likely to change significantly in the near term, maybe you're thinking about having a baby, or you might be needing to move to an aging parent and be closer to them, the flexibility of renting might generally be worth more than the opportunity of owning a home. Okay, number 5 is you don't have enough saved, and I don't mean just the down payment. This is one that often catches buyers off guard. A lot of people just think of the down payment as the number that they need to buy a home. Check out the video that I just did about what it takes to buy a home, how much money it takes to buy a home in 2026. But the down payment really is just one piece of the puzzle. You're also going to need closing costs, which can often run about 2% or 3% of the purchase price. Though parenthetically, sometimes we can get the sellers to pay for a portion or all of those closing costs. But you're also going to need cash reserves. A lender is going to want you to have a little bit of money in the bank after closing to make sure that you can actually pay for the mortgage that's coming up in your other expenses. Another thing you're going to want to budget for is for the replacement or repairs of systems in the home, like furnaces or roofs or appliances or water heaters. Those are all parts of your responsibility as a homeowner. Another thing you might want to look into, if you haven't already, is a home warranty, as those can help with your repair and replacement costs, but you want to make sure that you have enough money set aside or budgeted for future repairs or replacements after closing. You want to make sure you have enough cushion to handle those things that might come up without going into crisis mode should they arise. If you're stretching for a down payment and you don't have money for closing costs and reserves and some level of repair fund after closing, your margin for error is really slim. So it's something that you're going to have to be really careful about before you decide to move forward with buying a home. Okay, number 6 is you haven't been pre-approved, or your pre-approval doesn't actually reflect reality. Do want to be careful because this is something you could fix quickly, but I do see buyers who enter the market with a pre-qualification, which is basically a lender glancing at your numbers and saying, looks about right, and then they confuse that with a full pre-approval letter. A real pre-approval means that a lender has pulled your credit, verified your income and assets, and committed to a loan subject to the property appraisal and the contract and things like that. But that's very different from an estimated ballpark and a pre-qualification that's based on just hearsay. Even more important, just because you've been pre-qualified to say $700,000 doesn't mean you should necessarily spend $700,000. You want to look at what the actual monthly payment is on that number. Does that meet your lifestyle and your goals and other financial priorities? Because a lender's job is to tell you what you qualify for, not necessarily what you can comfortably afford. You're going to need to know the difference and make sure that your budget is one that you can actually live with, not just one that the bank will approve. Finally, the last one is that you're not emotionally or mentally prepared to buy a home. This doesn't show up on any spreadsheet. Buying a home is one of the bigger financial decisions most people ever make. And in a competitive market, we do see competition in some houses today, though some can sit on the market and it is not as competitive. But anyways, some of these houses can move really fast. There can be a lot of pressure. There can be multiple offers, waive contingencies, and emotional decisions that can be made under crunch time. So if you're going through a major life transition right now, maybe a divorce or a job loss or a significant relationship change or a health challenge, it might not be the right time to add the weight of a home purchase on top of that. I've had buyers who have come to me who are technically ready on paper, but were emotionally exhausted. When you're coming from a place of that sort of stress, you might make different decisions than you would if you had more clarity or patience. So this is a situation where maybe waiting for a few months or 6 months or a year can make a huge difference for you. And that timing might just work out for you better in the long run. Okay, so those were the 7 things that I had for you today. If you watch this video and you're like, okay, I got some work to do, then I think that's a win. That clarity maybe just saved you thousands of dollars or a lot of time and a lot of stress. But maybe you watched this video and you thought, actually, I'm in a pretty good place. Well, if that's the case, I'd love to talk to you, whether you're relocating to Portland or already living here and thinking about making a move, or just starting to figure out what buying might look like. Frankly, even if you're not ready, I'm still here to help and talk to you to try to help you get ready when the timing is right. Just call me, text me, send me an email or comment in the description below, or maybe book a meeting in the link that I have in the description. There's never any pressure or obligation to work with me. We'll just have a conversation about what your situation situation is and how I might be able to help you. I might be able to also refer you to a lender that can help you decide whether buying right now is the right timing for you. I'm Andy Harris with Foris Real Estate, brokered by eXp Realty. I'll see you in the next video. Thanks so much.